Hey everybody, we're well into earnings season now. Banks have generally reported earnings. One of my favorites to follow, as a lot of people know, is Bank of America. They reported their earnings recently. The stock is way up, so I want to see if it might still be a good idea to buy shares now. Before we dive in, please take a minute and click subscribe to my channel if you haven't done so already. Check out the link you see on your screen, fool.com/Frankel. You can get the top 10 stocks to buy right now from my sponsor, The Motley Fool. Best way to support this work I'm doing on YouTube, again, fool.com/Frankel. So let's get right into it. Bank of America shares went up about 5% after earnings. And I'll go ahead and share my screen real quick. All right, so here you can see just how well Bank of America stock has been doing. It bottomed out in October of last year and has pretty much gone straight up ever since. It's gone from about $25 at the low to a little over $43 a share as I'm recording this. That's a pretty big jump. And you can see even the yellow or the orange line is a price to book multiple. It bottomed out at around 0.8 times book, at which point it looked like an absolute steal, and it was, to about 1.26 times book today. So still not expensive on a historic, from a historic perspective. If I zoom out to say 5 years, you can see this isn't even the highest it's ever been. Its book value, price to book multiple, has been way over that 1.26 several times in the past. This whole period from 2021 through about halfway through 2022, it was a more expensive stock than it is today. So it's important to put it into perspective and show that it's really not that expensive. It's just that really investor sentiment has turned a little bit, but we're going to go over that. So here are some of the highlights of Bank of America's earnings for the quarter. I know there's a big mess of numbers on your screen. If you're watching this on a small screen, you might not even be able to see it well. So I will talk you through the most important parts. So on the headlines, Bank of America beat analyst estimates on both the top line revenue and bottom line earnings. Revenue grew by just 1% year over year. That's this number right here, up 1% year over year. In a nutshell, interest income did poorly. It was down 3% year over year. Everything that is not interest income did well. Things like investment banking fees, things like asset management fees. We'll get to all that in just a little bit. But revenue was up just 1% year over year, which, given the environment, is pretty solid. A lot of Bank of America's peers had pretty poor earnings, the year over year declines. Net income declined by 7% year over year. That was basically on declining net interest income. I want to talk about net interest income in length in a little bit, but it was down 7% year over year. The kind of key thing to know about net interest income with banks, and it's down across the board. Bank of America is down by 3% year over year with just net interest income. That's actually better than most of its peers have done. And the reason that net interest income is down across the board, in simple terms, is that the interest that banks are making on their loans, most of which were originated, especially mortgages, were originated when rates were very low, and the amount they have to pay for deposits, the gap between those is narrowing. Banks were paying, 0.01% on deposits not long ago. Bank of America had a lot of non-interest bearing deposits, which has declined significantly. But meanwhile, its loan portfolio the yields from its loan portfolio have not caught up. A lot of that is older fixed rate loans that really just, pay what they did, 3 years ago. So if we go on, the bank is actually doing pretty well. Added over 250,000 new checking accounts in the quarter. That's the 22nd consecutive quarter of growth. Added about 1 million credit card accounts, and this is just in the second quarter of 2024 alone. Consumer investment assets are at an all-time high. Of course, some of that was helped by great market performance. In all, Bank of America has a total of $5.7 trillion of combined deposits, loans, and investment balances. Big bank. They have the number one deposit market share in the U.S. Really, really big institution that's doing well. So here's what I was saying about the deposits. This is average deposits and rates paid. So if you look, the lighter of the two, the lighter part of each of these bars are non-interest bearing deposits. Those are things like checking account deposits that don't pay interest. Look at how much of the deposit base was non-interest bearing. This is 2 years ago versus today. It's almost cut in half. It's a much smaller part of their deposit base is non-interest bearing today, and the rates they have to pay on deposits have generally increased. Now, this is just the quarter over quarter change in the total rate paid. Now, when you see this line go down like this, that doesn't mean that deposit interest rates declined. It just means that they're growing less fast than they were. So keep that in mind. Deposit interest rates have definitely increased and continue to do so. Credit card delinquencies is another big thing that investors need to know about. Now, so far, the big question when it comes to credit card delinquencies is, well, in 2020 and 2021, 2022, these were at historic lows. You can see this little trough right here. This was, a very historic low in credit card delinquencies. And the reason for that is that banks generally told customers during the pandemic that if you need to postpone a payment, just give us a call. We won't make it a delinquent payment or anything like that. It was really easy to get kind of forgiveness for, missing a payment or two. That's not the case anymore. So you're seeing the delinquency rate creep upward and upward and upward. It looks like it's plateaued up here. That's just based on the past couple of quarters. It's actually over where it was pre-pandemic. So the question for the longest time was, is this just a reversion back to pre-pandemic means? Or is this something that's indicative of real trouble in the economy? If it plateaus like this, then the bank is in pretty good shape. And that's what the sentiment seems to be, is that this is a plateau. One of the reasons that the stock is up. So let's get down to some other things down here. Total loans are up year over year. The loans and leases are looking very good. Net interest income, this is what I was talking about earlier, and the biggest it's the biggest cause for concern in the immediate term, but looking forward, it looks like we are going to see it rebound. So you can see this is the lowest net interest income Bank of America's had in a long time, $13.9 billion. That was, down 3% year over year, not a big deal. The bank has been saying for a while that it expected net interest income to bottom out this quarter, the second quarter of 2024, and that it expects it to rebound to about $14.5 billion, where it was right here in the fourth quarter of this year. That's the guidance that the bank just gave, and if it can actually do that, it will be a pretty big accomplishment, and that's why we're seeing the market price this into Bank of America stock. That's why it performed so well. So just to kind of run down a few other numbers real quick, and I can stop sharing my screen to do that. So Bank of America reported a 29% growth in investment banking fees. I mentioned pretty much everything but interest income is working well. That's because M&A activity is higher than it was a year ago. IPO activity is higher than it was a year ago. It's coming from a very low bar. In 2023, no one was going public. No one was merging for the most part. Asset management fees are up 14%. We already talked about the strong consumer banking growth. And the bank has been buying back shares. It reduced its share count by about 100 million shares to 7.7 billion in the second quarter alone. So buying back shares, reducing the share count, very positive changes. Now, is the bank too expensive right now? The short answer is it's a lot more expensive than it was just a few months ago. But that doesn't mean it's a bad investment from a long-term perspective. I already mentioned it's still way below its highs of just a couple years ago. As rates come down, Bank of America can get some serious tailwinds. It trades for about 15 times forward earnings, which I would consider fairly valued, so not cheap, but it's still not a bad entry point. It's become a really good dividend stock. It's one that it was probably the oldest running bank stock in my portfolio. It's my largest bank stock position, and one that I plan on keeping. Not as cheap as it was, but if it can deliver on the expectations of the market, meaning credit card delinquencies have plateaued indeed, and net interest income did indeed bottom in the second quarter. If both those things are true, this could be a pretty attractive entry point. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investment, so I'm proud to partner with The Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by more than 4 times. So go to fool.com/Frankel to get your 10 stock picks now. The Motley Fool Stock Advisor returns are 650% as of April 16th, 2024, and are measured against the S&P 500 returns of 148% as of April 16th, 2024.